Hello, I'm David Cassidy with the midweek market update. Today, Thursday, the 6th of May. Well, the inflation theme has remained front and centre for global equity markets so far this week, thanks to contradictory comments from Janet Yellen, the US Treasury Secretary and former chair of the US Federal Reserve Bank, the Fed, having said over the weekend that she doesn't expect Joe Biden's latest $4 trillion fiscal plan, which includes spending on infrastructure, childcare and education, will cause any inflation problems because demand will be spread out over a long period of time. Just 2 days later, this Tuesday, the 4th of May, she stated that US interest rates may need to rise to prevent the US economy from overheating. Although she quickly backtracked by explaining that she wasn't, quote, predicting or recommending an increase in US interest rates, and stressed that the Fed's policies as central bank were independent of the US government, unfortunately, the damage had been done. Global equity markets had been on a roller coaster ride. Now, while it's no surprise equity markets initially sold off as Janet Yellen's comments came hot on the heels of last week's suggestion by Robert Kaplan, the president of the Federal Reserve Bank of Dallas, that the Fed should start to tighten monetary policy, thankfully, John Williams, the president of the Federal Reserve Bank of New York, this week said exactly what we have been forecasting, that while inflation will rise sharply in the coming months, he expects inflation to come back down quickly to the Fed's 2% target, and as such, the Fed doesn't need to change its current loose monetary stance. Now, inflation is not just a key theme in the US, but globally as well. And hopefully later today, we will hear if policymakers at the Bank of England also believe the UK's inflationary pressures are transitory. However, this week's equity market volatility highlights the market's current obsession with whether or not persistently high inflation is coming, and why we believe a sustained rise in inflation is unlikely. We fear this obsession will unfortunately result in elevated market volatility over the coming months as the year-on-year inflation readings accelerate as last year's distorted oil price passes through before quickly fading. Consequently, while it may be an unsettling couple of months ahead, long-term investors need not be concerned. And please remember that all of the teams at My Wealth are always here to help you with any portfolio queries or concerns you may have at any time.